Hey, option traders, we're going to be talking about a really important subject today, something that's going to really help your game, your options trading game, something that will help you really understand how options trading really works. So, what we're going to be talking about today is probability and implied volatility, two very important concepts or subjects when it comes to options trading. I get a lot of people that email me and say, Lee, I don't understand what is this volatility thing and how does probability work in options trading? And I tell them it's a very important subject. So we're going to go over both items today. I'm going to show you the tools that I use to really help us engage with really proper options trading. So if you want to up your options trading game, watch this video because we're going to be talking about some really important concepts. All right, so let's just jump right in. All right, everyone, Lee Lowell here from smartoptionseller.com. So as you know, if you trade options, whether you buy options or sell options, whether you buy call options, you buy put options, you sell call options, you sell put options, you do spreads, whatever, the most important thing to understand with options trading is where is the stock going to end up at the options expiration date. And this is specifically geared towards traders that hold the option all the way to expiration. Now, you don't have to do that. You can trade in and out of options anytime you want. You can buy them 1 minute, sell them the next. There's no rule that says you have to hold an option to expiration. But most people, and most of the people that I talk to, they hold the option to expiration because they want to get the full benefit out of it. If you buy something and you pay for something, you might as well use it for the whole time that you've paid for it, right? Now, I've made other videos that show you why it really doesn't make sense to hold an option until expiration, especially if you've bought it and you have profits built up. It's a really good thing to take profits when you have them, because if you wait until expiration, those profits can disappear. But they can also get bigger at the same time. But that's not what we're talking about today. What we're talking about today is the concept of probability and implied volatility. So when you buy options or you sell them, the main thing is, where is that stock going to be on a certain date? Okay, so if you're bullish on a stock and you want to buy a call option, which is a bullish strategy, your goal is for that stock to go higher. But when you're trading options, the speed, the timing, and the duration of getting that prediction right is really important. You can't just buy an option and say, well, I think the stock's going to go higher at some point. Well, when you buy options, you have to be a little more specific than that. You really have to have an idea of when you think that stock is going to move to the intended price level by a certain date. And it's that by a certain date, which is a really hard thing to figure out. Who knows when a stock's going to move from point A to point B in X amount of days? That's really hard to figure out. But when you're buying options, I'm talking about specifically buying options, that's what you're trying to do. You're trying to predict the date that the stock will end up at a certain price. But the other thing is, and this is where the probability comes in, is what is the probability of that stock getting to that price level by a certain date? And there's ways to actually figure that out. And the one of the most important tools that I use is what's called a probability calculator. A probability calculator can tell you what are the chances of a stock moving from point A to point B in X amount of days. And it's a really good tool because it can open your eyes and let you know what the chances are of you being successful in the trade. So if you knew ahead of time, what the chances are of you being successful, you would probably think twice about taking that certain trade. So let's just jump right in and I can show you what we're talking about. So in front of you here is a chart of Apple. This is a daily bar chart of Apple going back about 2 years in time. Here's the price action up here. So Apple's hit all-time new highs just very recently. This is trading looking at December 6, 2024, Friday right here is the last price action that we have for Apple. $242 and change, okay, all-time highs for Apple. So let's just say, you're bullish on Apple. You think Apple's going to go higher sometime in the future, and you want to buy call options or you want to sell put options. Okay, those are both those are both those are both bullish strategies. So we're going to concentrate on selling put options. And that's what we do at the Smart Option Seller. We're all about selling put options. They're bullishly oriented strategies, but we sell out of the money put options. And I'll show you what that means. So if you're bullish on Apple and you want to sell some put options, you also have to figure out, what are the chances are of Apple moving from point A to point B in the allotted time. Now, people that buy put options think that the price of the stock is going to go down. Okay, so if you buy a put option, your prediction is the stock's going to drop. But if you're looking at a stock like Apple, you can see that Apple's been in an uptrend, and it's been in an uptrend for years and years and years. So my question to people that tell me they want to buy put options because they think the stock's going to go down, I say to them, well, why do you think the stock's going to go down? I don't know. I just think it's overpriced and I think it's going to drop. All right, so these people are buying put options, and they're buying what's called out of the money put options. They think the stock's going to drop big, so they buy an option that will only pay off if the stock drops, all the way down here, far away from the current price of the stock. Stock's up at 242. They're buying put options that will only pay off if it drops all the way down here. So I asked them, well, do you know what your probability is of Apple falling that far in, the expiration date that you've chosen? And the answer always is, oh, I don't know. How do I know what the chances are of Apple is going to fall that far? Well, in the options world, you can check that probability, and it's what we use is called a probability calculator. So let's go to our probability calculator that we use at the smartoptionseller.com, and I'll show you how it works and why it works and how great it can be and help you in your own options trading. Okay, so what we've done here is we've this is a probability calculator, okay, and the upper portion here is the input section, and down here is the output section, and it will tell you the odds or your chances of winning or losing on the trade if you're in this case we're looking at buying put options. What are the chances of you winning if you buy a put option? Okay, so let's just say let's assume that you're bearish on Apple and you think the price is going to drop, so you want to buy a put option. So in the probability calculator, what we do is we fill in the information here. Current price is $242, and you're looking at an expiration date of February 21st, 2025. These are the monthly. This is the monthly expiration in February, and that's 75 days in the future. And most people, when they buy options, they think that the stock's going to move relatively quickly. They think they know where it's going to go, so they trade these shorter term options. 75 days is, to some people, that's not short. Some people think that's actually quite long. In my opinion, I think a 2 to 3 month option is an okay option. But in this case, we're looking at a 75-day option, and you have to fill out the number here. Volatility is 28%. This is a percentage number, 28%, and I'll show you where you get that number. And we're going to put in a price where they think that the stock is going to drop to. And in this case, they've taken $195. So let's go back to the screen here with the chart and say, Apple's at $242. They think Apple's going to drop below $200 down to $195. And they're going to buy that put option, okay, because they think Apple's going down. So if we go back to the option chain, we can see, let's go out to February. Okay, so this is an option chain from Interactive Brokers. Okay, if you have a broker, this probably looks familiar. We got put options on the right-hand side here. So we're looking at these February 21st, 2025 options. Here's the 195 strike for the puts. And we can see that they went out on Friday, December 6th, 2024, 54-cent bid at 57-cent ask. So something right in the middle is about 55 cents per contract, okay? If they bought that put option, it would cost them $55. But the key here is that they think they're going to buy this put option. They think Apple's going to fall from, here's the last price of Apple, $242 down to $195 in the next 75 days. Now, they don't even really think about that. They just think that Apple's going to drop. They don't understand, well, what is the probability of that happening? Okay. And the probability will give you an idea of whether, it'll tell you what your chances are of being a winner in this case. Okay. So we go back to the probability calculator. We have $242, 75 days, 28%. and I'll show you how to get that number. And you put in the target boxes of $195 in both targets. Okay, and now the probability calculator, once you do that, the probability calculator down here will tell you your chances of the stock falling that far and you being successful. Okay, so once we put in all the inputs and we click on go, here's the box that you really want to concentrate on, and it says finishing below lowest target, meaning what is the chance of Apple, the price of Apple, finishing below $195 in 75 days? It's starting at 242. So in the next 75 days, what are the chances of it falling over $47 per share? And right here, this box will tell you there's a 4.4% chance of that happening. And the way that the calculator comes to this number, it takes into consideration how Apple has fluctuated in the past. And that's all based on this volatility number. The volatility number, and I said we're going to be talking about another concept called volatility. Volatility number tells you how erratic or not erratic a stock has been over a certain period of the past. And it's not telling you which direction it goes in, it just tells you it tells you how big of an area it fluctuates, both higher and lower, over a certain period of time. Okay. Now, based on what the volatility is telling you, in a 75 days time, it is a really low chance for Apple to fall about $47 in a 75-day period based on how it's fluctuated in the past. So over a 75-day period, Apple really hasn't, moved higher or lower about $47 in a 75-day period. So it tells you the chances. If you're going to hold this option to expiration, if you bought this 195 strike put option for the full 75 days, there's only a 4.4% chance of Apple finishing below 195 in order for you to make a profit. Okay, so when I tell the people that come to me and I tell them, here's your chances of that trade working out for you, you only have a 4.4% chance of winning. And they're like, oh, wow, that's not a lot of chance. Maybe I don't want to make that trade. And 4.4% chance is really low. I mean, that's really small. And so you're putting up $55 for an opportunity to maybe see Apple get below 195, and there's only a 4.4% chance of that happening. Now, conversely, on the other side, what are the chances of Apple staying above 195 at the end of 75 days? And that is a 95.5% probability of that happening. So if you're an option buyer, here's your chance of winning. If you're an option seller, here is your chance of winning. Over a 95% chance of winning on the trade. So if you are the put option seller in this case, not the put option buyer, if you're the put option seller, you have a 95% chance of winning on this trade because Apple has has a 95.5% chance of staying above the $195 threshold. Okay. So once I start telling people about the odds and how that, what your chances are of winning, they start to think, wow, maybe I don't really want to buy that put option because the odds of the stock moving that far is really low. So before you ever enter into any kind of option buying trade, whether you're buying put options or call options, you may want to consult a probability calculator to let you know what your chances are of that happening. Now, this probability calculator specifically, this specific one is on our website, and you can get access to it. I'm going to show you what we have here. Under our services tab, you can see where if you want to learn a little bit more about the probability calculator, go here, click on the probability calculator, and you can read about it, and you can learn how to get access to it. The other things that we have in our what we do here is we have a couple newsletters and our coaching system. So at the Smart Option Seller, we are all about put option selling. That is our main gig. That's what we do 99% of the time, is that we sell these out of the money put options that have a low probability of working out for the option buyer. We're the option sellers. So we're always going to be on this side of the trade where we have such a high probability of winning. That's what we do. So if you want to learn a little bit more about what put selling is all about, go to our website. Also here's our free ebook. Okay, click on this free ebook And it's all about put selling. Put Selling Basics is an ebook that I wrote. Scroll down here. You can put your name and email address in here. And once you do that, we'll send you back an email with a link for the ebook. Okay. So that is the probability calculator right there. That's how it works. So, I just refreshed the screen. So we want to talk about how to get the information. So let's just put in the information back in here. We were at 75 days, 28%, and the targets were 195 and 195. You use the same targets because you only want, there's only one number that you want to know Apple's going to fall to, and that's 195. Click go, and we got the same numbers here. So the big issue is all these numbers are readily available except for this future volatility number. This is somewhere where you have to find out that information. This doesn't get defaulted in there on its own. You have to come up with this number, and I'm going to show you where you get that number. But once again, what does that 28% mean? That 28% number tells you that Apple, in its past, has fluctuated 28% higher or lower over its current value over a certain period of the past. Okay. Now, what you can do, there's a couple ways you can get that number. I want to show you another website where you can get that number. So this is the optionseducation.org website, optionseducation.org. It's called the OIC, the Options Industry Council, but the website's called optionseducation.org. If you don't have an account here yet, sign up. It's free. You get a free account. And over here on the left-hand side, once you've logged in, click on this Explore button right here and go over here where it says Option Quotes and Calculators. These are your free tools right here. We look at and click on this historical and implied volatility number the link right here, okay? And what that's going to do, it's going to bring you up to a page that looks like this. And you're going to type in the symbol. We have Apple typed in here, and it has 3 tabs along the top, and they just revamped this. So this is all new to me as well. You have your price chart. So this is a price chart of Apple itself, okay? So it's $242 and change as of December 6, 2024. This tab right here is the one that you want to concentrate on. This is where you're going to get that number to put in the probability calculator. Okay, this is a volatility chart. This is not the price chart. You can see the numbers over here, 39 high all the way down to -2. Okay, this is that volatility percentage number that I was talking about. And it has 2 lines, okay? The 2 lines, and unfortunately the colors are very similar. Here's the legend right here, HV20 and IV30. What does that mean? Historical volatility, a 20-day look-back period, and an implied volatility 30-day look-back period. So what it does is historical volatility tells you how Apple stock has actually moved on a day-to-day basis. Every 20 days, it's going to take a calculation. So it takes 20 days worth of movement, and it comes up with a number, and then it knocks off a day, and then it uses the next 20 days, and it comes up with the chart. Okay. So historical tells you exactly what Apple has done in the past. It tells you the exact fluctuations. The implied volatility, IV30, is a projection into the future of how the option market makers think that the historical volatility is going to look in the future. And for the most part, both of them track each other. You'll have periods like this where they diverge here and here. You can see one line goes up, one line's not really moving. So that's just a divergence area where there may be like a company, an announcement that people know that are coming, or the earnings are coming out soon. So the implied volatility may jump because people might be expecting some big movement. But in reality, the movement wasn't really that big, and that's reflected in the actual historical volatility levels here. So anyway, here's where we are right now, okay? Right here, and you can see it's hovering right around 15%. Now, what you need to understand is that these numbers, these most current numbers, are taking the at-the-money implied volatility of the nearest expiring options. Okay, so let's go back to the option chain here. Now, once again, this is Interactive Brokers. If you don't have a broker yet, in the description of this video, I have a link for Interactive Brokers. If you're looking for a new broker, you can go down and click on the link and take a look at Interactive Brokers. So what I want to show you is here. So December 13th, 2024 is the most current upcoming expiration for Apple's options. Now, if you have your if you have your own broker and you have the option chain there, you want to put in the implied volatility column. So you can see here, model implied volatility I have here listed in Interactive Brokers, and there's one for the puts and one for the calls. So we're focusing on the puts here, okay? And let's get those. And in the middle here is the strike column. So here's those 195 puts, okay? But in order to use the calculator and the percentage numbers that you're seeing, you want to go to the at the money strike, which in this case is 242. The at the money is a strike that closely resembles the current price of the stock. So 242.50 is that at the money strike. And these put options have a roughly 15.1% implied volatility. Okay. And if you go back to the volatility chart here, you can see they're both hovering right around 15%. So the option chain in Interactive Brokers is matching up to that. Here it is, right around 15%. Now, something else you can do quickly if you want to look at that, this little thing, if you use Interactive Brokers, ATM IV 15.1%. That means the at the money implied volatility. So this number right here is actually coming from this number right here. But we're looking at these February contracts, which will have a different implied volatility. Now, in this case, the at the money IV of the February options is just under 20%. And that would correspond to, well, they don't have the 242s. So it would have to be somewhere between the 240s and 245s. If you look over here, 19.9% and 20.3%. So, if you had to pick a number in between these strikes, it would probably be, 20.1% or something. So it's very close. So not only does each month have its own volatility, but each strike price has its own volatility. We're looking at these 195 puts for February. So you can see the volatility, the model was using in Interactive Brokers about 29.5%, 29.56%. Okay. And in the probability calculator, we were using about 28%. So we can actually bump that up to 29.5% and see what the numbers give us. So it changes it just slightly a little. In this case, the option buyer has only a 5.3% chance of winning, whereas the option sellers have just under a 95% chance of winning. So it just changed it a little bit because we bumped up the volatility. The higher the volatility, that means that the stock has more chance to move in a bigger range. Okay, so if we go back to the option chain here, you can see each strike itself has different. Let's move that. Let's get that. Okay, so each strike itself has different volatility numbers. This is what's called an option skew. The at the money options have the lowest volatility, and as you move down in strikes towards these out of the money options, the volatility starts to go higher. So that's what's called an option skew. And the volatility for the 195 puts is 29.5%, 29.56. So it's different than the at the money. So whenever you're using the probability calculator, you want to choose the volatility that corresponds to, number one, the month you're using and the strike price that you're using. And it will give you a really good, accurate indicator of what your chances are, or what the chances are of the stock moving from point A to point B in that amount of time. All right. So that's a very important lesson. So in this case, once again, we are option sellers, specifically put option sellers, and we sell these deep out of the money strikes. Okay. And we do that, and it's giving us almost a 95% chance of winning on the trade, meaning the stock has a very small opportunity to move that far by expiration. Okay. So the next time that you're considering buying, I'm not talking about selling, next time you're considering buying options, you may want to check the probability calculator to see what your chances are of winning. And if you see that you only have a 5% chance of winning, then you may start to think twice about making that trade. Now, in the probability world, you'll never have more than a 50-50 chance of winning. If you buy a stock at 100, there's only a 50% chance that the next tick on that stock is going to move higher or lower. So you only have a 50% chance. That's your best odds that you'll ever have if you're trading stocks, because the stock, once you buy it, there's a 50% chance of it going higher or lower on that next tick. But in the options world, there's so many different varying levels of probability. And in this case, we like to be option sellers because we have a 95% probability of winning. And that's what we have on practically every trade that we make here. So if you want to learn a little bit more about what we do, check out our services tab. We have our 2 newsletters. This first one here, we sell the put options. This one is we sell put option credit spreads. Okay, we also have our coaching, and here's the link for the probability calculator if you're looking to get access to that. And once again, here's our free ebook and also our video series. This is a more in-depth deep dive into what put selling is all about. It's a 5-part video series. You get a free 30 days trial to our newsletter as well. So you may want to look at that. All right. So what we've gone over today is we've talked about probability. We've talked about volatility, two big concepts that are hugely important in the options trading world. So I hope this has given you some good information on how to use those concepts to help your own options trading. All right. So once again, down in the description, I've got books and websites and other tools that you can think about using. Click on those, take a look at those. Leave me a comment, give me a thumbs up, leave me a like. Let's make these videos go viral. I make these free videos for the trading community. We all want to help each other out. We all want to become better traders. All right, send me an email. I'll always answer your emails. And that's all for today. I hope it's been helpful. This is Lee Lowell. I'll see you in the next one.